What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is going to be a compilation video of days 48 through 52. So let's go ahead and get into it. So this right here is today's video outline. This is what I want to discuss today. So first off, I want to talk about a review of my performance metrics. And I really want to discuss why I titled this video Psychology Over Everything, because I really want to break down what goes through your mind. And it's not always just about strategy. It's also about how you think. So we'll talk about that a little bit. Then after that, we'll talk about where are my wins coming from? Where are my losses coming from? The biggest lessons that I learned over this past week. And then just going through the trades that I took, but just kind of breezing through them. And we'll talk a little bit more about that in the future. So let's go ahead and let's get into these performance metrics and let's talk about this. All right, so these are the stats that I have for the entire time that I've been trading this funded account since October. So for the most part, I'm about 50-50 when it comes to my winning versus my losing trades. Losing trades make up 50% of the trades that I take, and my winning and break even trades together make up around 50%, give or take a couple of percentage points. Now, what I really want to discuss, because I want to talk about psychology, because for me, this is a 75K account that I'm trading with Apex. So in order to become eligible for a payout, you need to get the account to up to $2,800 in profit. Now, I've come to that level and got very close a few number of times. I got there one time at the beginning of November and then once again at the beginning of December. But it's like I'm running into a psychological barrier. And what I realize is that the mental strength that you need to have in order to achieve your trading goals is not something that should be looked over. It's something that's very important, because I've had enough skill and strategy to be able to run my account all the way up almost to that payout level on 2 different occasions. But it's like every time I get up to that level, I start making all types of mistakes. I start overthinking and I start trying to do too much, and I start straying away from the things that got me to where I was. So that's why I think psychology is so important, because you can have the best strategy of all time, but it's not just about having a good strategy. You got to be able to execute that strategy, and that comes down to being in the right mind frame as a trader. And I think that's something that gets looked over a lot, but it's really important, and that's something that I've been learning over these past couple of months. So I just want to come out here today and talk exactly about why I keep getting up to this level and getting so close to hitting that goal, but then I fall off. So let's go ahead and let's look at the notes and let's go through this slideshow real quick. So let's talk about slide number 1. Where are my wins coming from? So for me, my wins are coming from pretty much the same things that have been working for me this whole entire time. So buying a higher low retest with no bearish signs in the vicinity, and then entering zone trades from the extremes only. So let's go ahead and let's look at some of the trades that I took that were winning trades, and let's talk about why they worked. So this is December 18th. This was last Monday, I believe. There was a lot of losing trades, but we're just going to focus on the winning trades right now and see why those work. So this right here was a zone trade. If we go back to the slide, it says entering zone trades from the extremes only. So that means if I'm going long on a zone trade, I only need to go long from the bottom, or if I'm shorting it, I only need to short it from the top. So let's go back and look at that chart. So let's look at trade number 8 right here. I went long at the bottom of the zone, and then I took it back up to the top. Well, not exactly the top, but kind of like the midpoint. But look at where I entered at. I entered towards the lows of the zone where I was supposed to. So that was December 18th, December 19th. Let's see. Buying a higher low. That worked for me at trade number 1. Trade number 3, buying a higher low. That worked for me. Buying at the lows of the zone. That worked for me. Trade number 7, trade number 6. Buying a higher low. That's what works for me. So that was pretty much the story with all of these winning trades that I had. It was the same thing on December 19th for part 2, for trade number 9, trade number 11, trade number 12. I'm going long as prices come back to retest the higher low, as long as there are no bearish signals within the vicinity. So anytime I really go about using that strategy, it works very well for me. And here's another winning trade at 13. I went long at the bottom of the zone. Notice how the bottom of the zone was right here. I entered right there. Same thing at 14, 15, and 17. Those all had success. Now, it was the same story on December 20th on trades 5, 12, 9, 13, and that's it. And let's see. Another scenario right here on December 21st from trade number 3, I shorted at the top of the zone and took it back down to the bottom. Let's see. December 21st, I did have winning trades on these days. Here's a higher low right here that worked on 17. 13 was profitable, but that wasn't a trade I should have took, and we'll talk about that a little bit later once we talk about the losses. And on the 21st for part 3, another winning trade at 21. What did I do? I went long based on the recess of the prior higher low. So that's really what works for me the best. Same thing right here on part 3 at trade number 22 and trade 25. And on December 22nd, I'm just trading the zone the way that I know I'm supposed to. I went long at the bottom of it, took it back up to the top. So when it comes to my winning trades, those are the things that have been working for me. And I believe these are the last 2 slides to get us caught back up. Right here at 3 and 5, I went long towards the lows of the zone, towards area of support that was already established from a previous higher low. And then on trade 10, I went long right here based on a prior higher low. So all of those trades pretty much align with the same 2 things. Those are the only 2 things that work for me. Buying a higher low retest with no bearish signs in the vicinity, and then entering my zone trades from the extremes only. Those are where my wins are coming from. So when you're trying to work through a drawdown, it's so important to identify where those wins are coming from and where those losses are coming from, because then that starts to give you a more clear picture of what exactly you need to continue doing, and then what you need to kind of cut out of your strategy and try and avoid, so you can make sure that you let your losses stay small, but you let your wins compound and, just run up those numbers over time. So you want to make sure that you identify both of those. Those are very important. So let's go ahead and identify the second part of working through a drawdown. So where exactly are my losses coming from? And this is where we get into the meat and potatoes of really all of the trades that I took this week. So let's go ahead and run through this slide real quick. So let's talk about it. So where are my losses coming from? For one, I'm buying high on any of my setups that I take. It doesn't really matter which setup it might be. Me buying high just has never worked for me. And this just hasn't been a thing over the past 2 months. This has actually been something that I don't think this has worked for me ever in my entire trading career, especially not this year. Just the way that I trade and the way that my stop loss is set up, I can't go long at higher prices because my stop is not wide enough to be able to make it through and survive the pullback that is pretty much like 90% probable, and more than likely it's going to pull back, hit my stop, and then when I get stopped out, that's when the move starts to go in my direction. So it's very important for me to never ever buy high on any of my setups. And we'll go through all of these charts once again and talk about all of these losses and how we can actually correct them, and then what we can do going forward to make better progress and to get back on the right track. So number 2, getting greedy on zone trades and not locking in profits. The thing is, when I'm in the zone, I just want to get the most that I possibly can. But sometimes when you trade a zone, you got to understand that the zone moves fast. So you have to do the same as well. Because when it comes to a zone, once you get to that other side of the extreme, it's a lot of profit taking that's going on. And then it's a lot of people trying to trade the breakout that are getting trapped. So it's a lot of activity going on at those levels. So you want to make sure that you don't hesitate. And when you see prices get back to the other side of the zone and you're in a trade, you got to get out and you got to lock that profit in, or else you can see the zone come all the way back down to the extreme where you insert from, and then you might get stopped out at break even. Or if you want to be stubborn, you can let the losses keep running until it hits your stop. So all of this stems from not taking your profits when you're supposed to. So just remember, a zone moves fast, so you have to do the same. So let's go ahead and look back at the charts and talk about these first 2 points and look at some examples. So what were we talking about? Getting greedy on the zone trades and buying high on any of my setups. Okay. All right. So December 18th, this was some of the most egregious mistakes I made throughout this entire week. Now you see trades 1 through 5 right here. One is so jumbled up, it's hard to see, but it's 1, 2, 3, 4, and 5. Now, originally I was doing fairly well when I was trading this overall zone type of price action that we're looking at. So I went long towards the bottom of the range, right? I went long right here, the blue triangle, and I should have been getting out right here at the top of this wick as we came back to test the top of the zone right here. But if you noticed, I went long right here and I added to my position in expectations that the top of the zone would get hit and then I would be able to take profit. Now, if you look at the top of this wick, it did come back up and test this point. But that's what I talked about when I say you can't be greedy when it comes to trading the zone, because those zones will move away from you very quickly. You see how this wick, it's hard to see where the candle closed, but the wick kind of went more than 50% of the length of the candle, and it closed fairly close to the actual green line that we're looking at that defines the zone that we're trading in right now. So that happened fairly quickly. And remember, I trade on a 1 minute chart, so this happened in less than 60 seconds. So don't think that because your trade is already running that you can just add to it and you can make $1 million from it, because that's what got me in trouble right here. And really throughout this entire section, I had good trades that I could have made profit on, but because I managed them the wrong way, I ended up taking losses, and that really hurt me a lot. Because normally I should trade either 1 or 2 contracts when it comes to, the normal type of trade that I would take. But because I felt like I knew it was going to work for me, I got greedy and I added like 5 contracts right here to the one that I was already trading, which from a numbers perspective, if you want to add to your position, you shouldn't really add like 5 times the size. Just maybe double the size. Like maybe if you want to add 2 contracts, you can do that. Or maybe if you want to add 1 more, you can do that too. But to add 5 to a position that started off as 1 or 2, that might be a little bit too much. And I think that right there is over leveraging. And that's actually one of the topics that we'll talk about a little bit later also, because that got me in trouble a whole lot this week as well. So really just not respecting the zone. I think that's the issue right there. You got to remember that a zone is a clearly defined range where prices trade within that overall price range. So when it gets to the top and you went long at the bottom, you got to get out. And that's really what I learned the most on December 18th between trades 1 and 5. So let's go ahead and talk about the next 2 things on our list and talk about why we need to avoid those. So buying high on any of my setups, we'll get back to that in a couple of seconds. So number 3, getting scared on zone trades and cutting the trade before it hits the other side of the zone. Only do this if there are clear signs that indicate that this is what you should do. And that's so important, because when I'm trading these zones, sometimes, like if I trade a tight zone where it's like a 10 to 20 point zone, I have no problem holding the trade from one end of the extreme to the other one, because it's a fairly quick move. But a lot of times when the range or the zone is expanded, and let's say it might be, I don't know, 30, 40, maybe a 50 point range, I start getting scared because my normal profit target is 20 to 25 points. So once I hit my normal profit target, it's like an automatic signal in my head that's saying, okay, Ty, lock in those profits, take those profits, go ahead. Now that's the mindset I should have for any other setup besides a zone setup. Because when it comes to a zone, yes, I might hit my profit target that I'm looking for, my 20 to 25 points. But I got to play the zone for what it is, because I know more than likely the zone is going from one end of the extreme all the way to the other. So I shouldn't be cutting my profits when it comes to the zone trades. And that's what I got to remember. It's 2 different mindsets that I have to have. I have to have a mindset that I use when I'm trading zones and a mindset that I use when I'm trading everything else, because those mindsets, even though they're similar, they do have some major differences. And when you use the wrong one in the wrong situation, you could end up leaving profits on the table. So let's go ahead and look at some examples of where I just didn't take the profits that were there, and I had profits, but maybe I could have had more. So let's look at trade number 21 right here. This was one of my best trades of the week, but it just didn't end up the way that it could have. Now, I went long right here towards the lows of this entire range at 670. And I ended up getting out at 37,700. So I caught 30 points on it. And, that's a good trade until you look at the potential that could have been there. Now, the top of the zone was at 710. So that's where the range extended from 670 all the way to a high of 710. So I should have been able to grab at least 40 points from this entire zone. So I entered at the right spot. I did a great job. But where I went wrong was, for one, I didn't add to my position when I saw clear signs that told me that I should have been adding, because when it comes to the higher low, that's one of my favorite strategies that I like to trade. So if I see that higher low, I shouldn't be scared of it. Everything makes sense in that scenario. So I should add to this position right here and then take prices back up to the top of the zone right here at 710. So that was one thing I should have done better. And then I also at least should have took profits when I got to the top of this zone, because if you look at this overall swing high right here, this was really the highest that prices have been able to get to throughout this entire period from maybe 1 o'clock until 4 o'clock. So if I'm not taking profits right here, then maybe that's me being a little bit greedy, just thinking that prices are going to continue to run. But you got to trade what's in front of you and not what you want it to be, but you got to trade what you see. And that's very important, because I could have grabbed at least another 20 points off of this trade, and that would have made a big difference for me on this particular day, because I think at this point, up until trade 21, I was down by a lot. But then trade 21 helped me almost make back half of that money. And then I probably could have made back maybe like 80 to 90% of all the losses I took the entire day if I would have been able to just take profits at the highest swing high when prices came back to that level. Now, I ended up getting out as they came back into the zone, but even though I did catch profits off of that one, it was still just a lot of execution flaws that need to be cleaned up. And once I clean those up, I can definitely lock in some really good profits. So that's an example of what I mean when I say you got to make sure that if you want to trade that zone, you take it from the bottom to the top and you don't budge on it. Now, here's another example on trade number 3 right here from December 19th. Now, right here, I bought a little bit below the zone, but I had a reason. I went long right here because I saw the long tail candle wick and prices spike back through the original entry price that I had on trade 2. So that's all of my rules that tell me to get back into that zone trade. But what I didn't do, I didn't take profit when they came all the way back up to retest this prior area that prices broke down from where the selling originally started from. Because I think on this day, if I'm not mistaken, I went long at 745 and had my target at 755. Prices came back up to 754. And I just refused to take profits because I wanted to hold on for that one last extra point, because I was like, man, I need everything. But that's another rule we'll talk about also, where I say that you got to take what the market is going to give you, and you got to learn to be flexible. You know, you don't just want to be concrete and adamant about what you want to do in the market, because the market is an ever-changing environment. You might have thought that you wanted to do one thing on the last candle, but once this next candle got printed, the scenario changed. So you got to be able to change on the go, change on the fly, and make sure that you continuously adapt to the ever-changing market environment that you're trading in, because nothing is stagnant in the market. Everything is dynamic, everything moves, everything changes. So you got to be able to do that also as a trader. And if you don't, you might miss out on profits that could have been locked in, and it's no telling what that can do to your psychology. And that's why it's so important to go ahead and lock those gains in, because I don't know what it is for me, but when I lock in gains, whether or not they're small, big, large, or whatever, they do something for me mentally. They make me a lot more calm, a lot more relaxed. And then I can look at the market from a more open-minded perspective, make the right decisions, and trade what's in front of me and not what I want it to be. So that's so important. You got to lock in those profits. And I think that's a big lesson that I really learned this week. So let's go back and continue talking about where my losses are coming from. All right. So that right there was talking about getting scared on zone trades and cutting the trade before it hits the other side. You got to make sure you hold those. All right. And then next, I'm not following the 2 losses per setup rule that I have. Now, I have a 1 to 2 risk to reward, kind of, sort of. We can actually, if we look at the statistics, let's see. My average losing trade is 58 and my average winning trade is 83. So let's just do the math real quick. All right. Okay, so in reality, my actual risk to reward is about 1.43 right now. So that means that I really can only take 1.4 losses on each setup based on my metrics. Now, ideally, I would like to have a 1 and 2 risk to reward. That's what I aim for, but sometimes it just doesn't turn out like that, because sometimes I take a lot of quick scalps, but ideally, that's what I aim for. So when it comes to my trades, I can only take 2 losses per setup before moving on. And that was really the thorn in my side this week, because I had a lot of good trades and I did fairly well, but when I would be wrong, I just would refuse to accept the fact that the trade that I made was a loss and that whatever I did just wasn't working. So I need to step back and reconsider. Instead of reconsidering, I just said, nah, Okay, I was just too early, so I'm gonna take it again. Oh, well, I was just a little bit too early on that one. So this third one will be the right one. I'm like, oh, I bought too high on the third one. So the fourth time that I buy it should be the one time that it works. But if you have to try to trade that many times, it means that it's just not there for you. You know, no matter how much your mind wants to convince you that, yeah, keep trying, keep trying, keep trying. Your trade is there. Your trade is there. It's not. You got to believe in the numbers. Don't let your mind play tricks on you. You know, that's what I mean when I say psychology is so important. Sometimes your mind can put you in a mirage where you believe something that's not really there because you just want something to happen so bad. But you got to trade what's in front of you, and that's so important. So if we go back to December 18th, I kind of made back some of those profits that I was talking about on trades 1 through 5. I made back some of those on 6 and 8. I had 2 good trades right here, but then I come back on 9 through 12, and look at what happened right here. I went long at the bottom of the zone one time against momentum. That's another a topic that we'll talk about later on in the video as well. You don't want to get in the way of momentum. You don't want to get in front of that. If anything, you want to be on the side of momentum. You don't want to try and anticipate where the momentum is going to stop, because more than likely the momentum is going to go a lot further than what you think. So you just got to wait for the market to give you a sign instead of trying to tell the market, hey, this is where you're going to turn around. You got to let the market talk to you and not the other way around. So right here at 9 through 12, I just forced this trade 4 different times. I went long right here, 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 and here. None of them worked, and that really just killed my entire loss limit for that entire day. And then it killed my psychology for that day, because now I'm trading on edge. I feel like I gotta make that money back. And anytime I feel like I have to make money back, somehow, some way, I just end up losing more, because I'll have trades in front of me where I could lock in profit, but because I'm down by more than what I want to be down by, I feel like I got to make it all back on one trade. And then I just squander opportunities that were in front of me where I said, wow, I had 3 opportunities. If I could have took all 3 of those, I would have been able to make back all of my losses. But I missed out on all 3 of those, and all 3 of those trades came back to break even. And now I'm even more frustrated, because now I took losses, had a chance to get them back, couldn't do it. Now I'm double frustrated. So it's just so important to not even go down that road at all. So don't force the trade if it's not there, because you don't know what kind of future effects you trying to force that trade could have on you going down the line later on in the session. So it's so important to stay ahead of your psychology and stay on top of it, and make sure you maintain a positive frame of mind and a positive mind state, so that you can trade in a very calm, relaxed, and, you know, serene and peaceful way. I think that's the best way to do it, honestly. And I ran into the same scenario on 15 through 18. I tried to force the same trade 4 times right here. 1, 2, 3, and 4. And none of them worked for me. And, you know, that really only just added on to the losses that I was already taking. So that was December 18th. Let's see. 19. It was one more scenario where I just kind of, here it was. Okay. Look at this one right here, 15 through 18 on December 20th, this from last week. Okay, so I went long right here at 15, and it's if we read the notes, it says, don't force a trade just because of a strong trend. Always respect price action, and that's very important. We talk about that all of the time also. Now notice how up here, I tried to go long once, twice, and 3 times. So once I go long once and it didn't work for me, okay, that should raise my incentive. But I still have the green light to go long twice if I feel like things are going in my favor. But if you notice right here, I went long at the same price that I did on 15. And of course, I got the same results. It didn't work. And that's another rule that I talk about a lot, which is if you do the same thing from the same prices and the same market scenario, you shouldn't be surprised if you get the same results. Now, that could either work for you in your benefit if you take a positive trade that wins money, or it could work for you as a detriment if you keep trying to force the same trade that's losing you money. So always remember that you don't want to just keep trying to force something. And this is another example right here at 15, 16, 17, and 18. I had 4 trades in a row where I just tried to keep forcing the same exact trade. Well, really 5 trades in a row, because it started at 14. That didn't work. And it went through all 4 of these trades before I realized, oh, okay, I need to stop. So that just goes back to making sure that you don't force something that's not there. Because gains in the market, they might seem like, oh, okay, I'm up today, I'm good, I got cushion room. but you don't just want to start making wild cowboy type of trades because you feel like you have some house money to play with. You have to act like you're still at 000 for the entire day, and this next trade is going to be your first trade of the day. So you need to make it your best trade if you can. So that's the mindset that you want to have. Don't start thinking that you can just get more aggressive because you're up on the day, because for a lot of these days I was in profit and I could have stopped. We'll talk about that also. That's another lesson I learned. But because I kept going, I just felt like, oh, okay, I have house money to play with. Don't think like that. Always remember that nothing comes easy in the market. You have to earn every single last point that you want to get from the Dow Jones. So always keep that in mind. It's very important. All right. So let's continue moving on and talking about where exactly my losses are coming from. All right. So that was the 2-loss rule right there. Only 2 losses per setup. I can't budge on that. If it's not working for me, I can just wait for another time where I see a setup that's a lot more appealing to me, and then I can try and get in on that setup and get in to the best of my ability. So very important to make sure that I keep a 2-loss maximum for every setup that I try and take. So next, taking the second entry instead of the first. That's a big part of where my losses are coming from, because one thing that I've learned over time is that you have certain setups that you like to trade. The setup works the best the first time that you get an entry, because that's when the majority of the market will also be participating in that certain setup that's beginning to form. But think about it from a perspective of a trader that's already in that move that made money. Let's say you went long at the bottom of the zone. You caught that and you took it back up to the top. Okay, you made your money. So now when it comes back to the bottom of the zone again, aggressive traders might get back in, but a conservative trader is going to say, hey, I just made money from this setup. Let me wait for the next setup and then let me play that the way that it goes. So it's not that it's not going to be people participating and entering at that price level when it comes back the second time. There will be participants, but it just won't be as many as the first time, because you have some traders that are a little bit more conservative. They don't want to get back in after they just made money. They want to wait for a better opportunity a little bit down the line. And I think that kind of got me a little bit this week, because I would see my entries and I would hesitate, and I would see it work and I would see it move without me. So I say, oh, okay, when it comes back the next time, I'm going to take it the second time, which is more so like revenge trading when I think about it. You know, you didn't catch the entry, you didn't catch the trade. It's okay. You know, the market is not going anywhere. It's still going to be here. You'll have plenty of opportunity to make money back. So don't stress about a trade that you miss. You know, let that second entry pass you by, and then just wait for whatever setup is coming after that. So that's one big thing I learned also. You know, take that second entry, but, well, don't take the second entry. Hold on. Take the first one. Skip the second one. Very important. And then trading against momentum. We talked about that from a few days earlier. You know, you don't want to get in front of momentum and go against it. You know, because like I was saying earlier, you never really know where the momentum is going to fizzle out at. So don't try and just be Cleo the what's her name? Y'all know Cleo. What's it called? Cleo the Psyche. Don't try and predict the future. Let the chart tell you what it wants to do, where it wants to turn around. Look for those signs, and when the market gives you the signs that you're looking for, then that's when you start to look for those trades that you're trying to take. So I had multiple infractions this week when it came to trading against momentum, and once again, that's something that never works for me. And when I talk about psychology, this is what I mean. Sometimes when you get close to a profit goal that you have and you start focusing more on reaching that goal instead of taking good trades, you might start doing things that you know that you're not supposed to do, but you're just hoping that it works this one time. Because for me, all right, so I told you guys I need to get the account up to 2850 in profits in order to start taking payouts. I got the account up to about 2,500 in profits at the highest point that I ever had it on December 7th, not 17th, but December 15th, I think 2 Fridays ago. So that whole entire weekend, the only thing I thought about was, wow, I'm only $300 away from reaching my profit target. That's a 30-point trade. Most of my trades are anywhere from 20 to 25 points on average. So I was like, wow, either I need to just catch one good trade or maybe catch 1.5 good trades, and I'm there. I finally made it, and I finally can accomplish the goal that I set out to reach. So I was more so focused on trading the account balance and trading the account number instead of actually trading what's on the screen. Not worrying about how much is in the account or how close I am to whatever goal I might be trying to reach. All of that stuff is irrelevant until you reach the goal and you actually cross that threshold. But until then, only thing you should be focusing on is just taking the right trades, taking the right entries, and doing the right things and following your trading plan. Because all of these mistakes that I made, none of these were new mistakes. All of these were old lessons that I've already learned throughout this entire year, but I just broke all of my discipline. I went against my trading plan and I said, look, I just need one good trade. And I started to think that one good trade was just going to be easy because I had ran my account up so far to this point. I'm just thinking, oh man, I'm that dude, man. I can 30 points. That's nothing. Oh, that's going to be easy. But like I said before, when it comes to the Dow Jones, there's no such thing as easy. You got to earn every single point that you get. And if you come out here and you break your rules and you think that this is going to be the time where if you break your rule, it'll work for you, you got a very tough lesson coming your way. Take it from me. Don't learn the hard way like I did. Learn the easy way and just make sure you follow your plan every single time, because if you don't, you could go down this path that I'm going down, and that's not good. So this is what I mean when I talk about psychology. I started to believe that the market was easy, so I started breaking my rules, and that's just something that you can't do. So trading against momentum, I knew that was something I shouldn't do, but I still did it anyway, and that's something I got to work on and clean up. So let's move on to the next topic: not following the re-entry rule after a stop out. Now, it was so many occasions where I had trades that didn't work for me originally, even though I had a really good entry and I follow my trading plan perfectly. Sometimes you get stopped out on trades like that, and that's okay. That's part of the game. But if prices ever spike back up through that same trade that you took where everything made sense, and it spikes back up immediately within the next 2 to 3 minutes, you got to get back into that trade. Now, I've done this before where I've gotten back in, but I've also done it before where I haven't gotten back in. And the difference between those two scenarios is fear. It's a part of you as a human that's just like, hey, this just now didn't work for me and I'm getting right back in. Maybe I shouldn't do that. But because I've studied this over time and I've seen the results, I know that more than likely it's better for me to get back in, because remember how I said you don't want to trade against momentum. You want to trade with it. Well, if prices are spiking back through that entry price that you just took, that's momentum, but it's going in your favor. So now you can ride momentum and use it to your advantage to actually make money instead of losing it. But you could never ride that momentum back up if you don't re-enter that trade. And that's why the re-entry rule is so important after you have a trade that gets stopped out where everything seemed right when you took the entry, but it just didn't work on that one occasion. Sometimes prices will spike back through your entry zone, but then come back up through it. It's like a little miniature false breakout, so you don't want to get scared by a false breakout. Just get back into that trade and re-enter if it spikes back up through that price. And that's so important, because this rule right here, it didn't cost me money as far as money coming out of the account and the account balance going down, but it did cost me an opportunity cost, because I had losses from before and I had every opportunity to make those losses back, but I chose to not get back in. So pretty much I'm choosing to lock in those losses and say, yeah, I want to hold on to those losses. I don't want to make them back. So that's pretty much the mindset that I'm having if I'm choosing to not re-enter. So I always got to remember, no matter how I feel, it's not about feelings. It's about following the trading plan. So it doesn't matter how you feel. If your rule is to re-enter after a stop out, then that's just what you do, plain and simple. So that's what I got to remember. Don't focus on your emotions so much. And I think this all just stems back to trying not to make sure you try not to trade your account balance, because all of these things that I was going through pretty much just stemmed from fear and greed. I was getting greedy and taking trades that I know I shouldn't have. And because I was being greedy and I was getting punished for it, I started to become fearful when I actually had real opportunity in front of me that I should be taking. So that's why you always want to make sure you follow whatever plan you have, because that'll help you stay away from greed and fear. because both of those can actually bring you down to ruin if you let them affect you too much. So that right there was not following the re-entry rule after a stop out. So next was not taking good profits when they were available. I was being greedy and I wasn't being flexible. We talked about that before, and let's go back and look at some examples of the chart of where that happened. So we talked about trade 3 right here, but let's talk about trade 1 from December 19th. Now I went long here as prices came back to retest the support of higher low A, which is a great entry by me. I'm following my plan exactly the way that I know I'm supposed to. But look at where I got out. I got out at this level, the next support level, well, the next resistance level above. And, I made profit on that, but there were no real signals for me to get out of that move. There were no bearish signals within the vicinity. So that means that I should hold that higher low trade until it hits my profit target, or until the move just gives me a sign that says, okay, the uptrend is over. So that means I need to see a change of character, which means I need to see a lower high, which didn't happen until prices got all the way back up here at 765. I got out at about 740. So on this one trade, I left about 25 points on the table, which is just unacceptable because, as a trader, you will have losses. So you don't want to cut your winning trades before you can let them fully develop and get the most that you can out of those, because, you never know when losses are coming around the corner. You know that they're coming, but you never know. So you want to make sure that you have a good enough cushion room so you can weather the storm when those losses actually do come, because they will. It's just guaranteed. All right. So that's what I mean when I say you got to make sure that you maximize those trades. If it's not a reason for you to get out, then don't get out. Same thing right here on trade number 6. There was no reason for me to get out right here at all. Prices actually formed another higher low after I entered that trade 6. So I should have been actually adding to my position right here instead of getting out. So it's not just about locking in profits. It's good to make profits, but you got to maximize the profits that you're supposed to have. Here's another example right here on trade 9. I went long at the bottom of the zone, but didn't take it all the way back up to the top. Same scenario right here on trade 10, long at the bottom of the zone, didn't take it all the way back up. And let's see, let's keep going. 14, that's a good example. Went long at the bottom of the zone, didn't hold it all the way up to where I'm supposed to. Just getting scared, trying to lock in profits because I'm down already and I'm taking losses. So I'm like, man, I don't want to give back these open profits that I have. But you got to trade the trade for what it is. Don't try and trade and try and make back the losses you made before. Trade the trade that's in front of you and maximize the opportunity that you have right then and there, and then worry about the results at the end of the day. Don't even think about your account balance. Don't think about the fact that you might be up for the day or down for the day. Just think about the trade that's in front of you. What does your trading plan say you need to do in order to maximize your success and be as profitable as you can off of this one setup? And whatever that might be, that's what you have to do. And don't focus on anything else except for that. So that's very important. So let's go back and continue going on. So that right there was not taking good profits when they were available, being greedy and not being flexible. So next, over leveraging and using too much size in the wrong situations. This can lead to me focusing on the money and not on the trade itself. And that kind of just echoes what we've been talking about so far all along, where you want to make sure you do not trade that account balance. Trade the trade that's on the chart and trade the setup that you're looking at, and just worry about that. Don't worry about anything else. The money is irrelevant. The money only matters when it's time for you to take out a withdrawal so you can pay your bills. Other than that, you don't need to think about the money. So that means you should think about the money once a week. On Friday, when the market is closed and it's time for you to put in your withdrawal request. That's the only time you should be thinking about the money. And when I was over leveraging, I was just trying to, I already took losses on Monday, right? So instead of being down by 30 points and being 30 points away from hitting my profit target, I think I lost $1,300 on Monday, which was pretty bad, not gonna lie. So at that point in time, now I went from being down, being 30 points away from hitting my profit target to being 160 points away from hitting my profit target if I'm trading 2 contracts, where it's $10 a point. So I was like, you know what? I need 160 points to get back to the goal I was trying to reach. But what if I traded 5 contracts where it's $25 a point? So then I started doing the math and I was like, oh, okay. I might need only about 60 points to get back to where I wanted to be. So I thought that, oh, okay, I can definitely get 60 in one day. I don't know about 160 because I've never done that in one day. I think the best I ever did in one day was like 140. So I was like, okay, the probabilities of me getting 160 in one day are very slim. But I've had plenty of days where I've been able to make 60 points in a day. So if I can do that with 5 contracts, then, oh, cool, I'm right back at my goal. But that was me just considering the positive side of using 5 contracts, but not considering the risk. Because the risk is, hey, yeah, you can make big money with this contract size that you have, but you can also lose big money. And you gotta think to yourself and ask yourself, if I lose this amount of money, how is it gonna affect my psychology? Am I gonna be able to stay mentally calm and mentally focused if I lose that much money on one single trade? And the answer for me was no, because when I was trading 5 contracts and making money, everything was all good until I started taking losses, and then I was just in a downward spiral psychologically, because I'm like, bruh, see, 25 contracts, my stop loss is 13 points. So that's what, 250 plus 75. So that's $325 in losses that I'm taking on every trade. I'll take 2 losses in a row, that's $650. You add the commission in there, it's around $665. And for me, that's just too much. I can't lose that much. It's just, I'm not at that point in life where I can lose that much and just be okay. So I got to make sure that I trade a contract size where it's enough, it's high enough for me the value of the actual contract size is high enough for me to take it seriously. So I respect the market, but it's also small enough where if I do take losses, I'm disappointed, but I'm not mentally broken where I'm like, man, I can't do it. So it's important to find that sweet spot when it comes to position sizing. And for me, that sweet spot is 1 to 2 contracts. If I really, really, really like a trade, like say it's a really good looking zone trade that I got a perfect entry on, maybe I might do 4 contracts at the most, maybe 5 if I'm adding to my position. But I can never just start off with a 5 lot contract size because I'm not there yet. One day I will be, but right now I'm not. So I got to stick to my strengths and cross that bridge when I get there. I think I'm trying to jump ahead of the gun a little bit too early. And I think that just goes back to greed. I'm trying to make way too much, way too fast. I've been trading 1 contract and 2 contracts all year long, and it's been doing completely fine for me. So it's no reason to really try and change it up if it's not broke. What's the moniker that they always use? They say, if it's not broke, don't try and fix it. I think that applies perfectly in this scenario right here. So over leveraging and using too much size is definitely something I gotta avoid, because from a mental perspective, I do better when I trade smaller size. I have a lot more confidence, and more confidence just leads to me trading my trading plan the way I know that I'm supposed to. All right, so that was over leveraging. So let's talk about these last 3 and go ahead and get ready to wrap it up. So going long without seeing a higher low first. Now, this right here is just an egregious mistake that I should never make, because this just means that I'm trading outside of my trading plan, because when it comes to going long, I need that higher low. Simple and plain. It's no such thing as me trying to anticipate a higher low getting formed. If the higher low hasn't been printed on the chart yet, I can't trade it. Simple and plain. I can't make any exceptions for that rule at all, because it never works for me if I do it this way. So it's something that's very important that I got to learn from. Let's move on to the second to last topic, which is not holding my best setups because I'm afraid to give back open profits. I think we talked about that plenty a little bit earlier. And just to touch on it a little bit more, you got to remember that if you're in your best setup, you got to hold it, because this is a move that you studied, that you practiced for, that you prepared for. And you was like, okay, if I see this type of setup in the market, this is exactly what I want to do. And this is exactly what I'm aiming for. All of that knowledge that you have is based off of research. It's based off of all the hours that you put in from studying. So you need to go ahead and hold those trades. I would say add size to it, but that's tricky. That takes a little bit more practice. But at bare minimum, you got to take whatever contract size you traded and you got to hold that trade until you can get the most amount of profit out of it or until you hit your whatever profit targets you might have, or until the market just gives you a sign that says, hey, things are about to change. It's time for you to get out. And that's so important because, like I was saying earlier, you don't know when the losses are coming. So you got to make sure that when you are in a winning trade, you milk that trade as much as you can and you get everything you can from it without being greedy. Get everything that's possible for you to get based on your strategy, and then let it ride after that. All right. So that's very important. Hold your best setups and don't be afraid to give back open profits. Having a break even trade is not bad if you followed your trading plan perfectly the way that you know you were supposed to. That's not a bad thing. Break even trades are part of the trading game. It happens. You can't avoid it the same way that you can't avoid losses. Like if you guys remember the statistics that I showed you from earlier, 42% of my trades are wins. 8% of those are break even. So, every 8 trades out of 100, they'll be break even. You got to get used to that. You can't avoid those. Those are something that will happen. So, don't be afraid to get back those open profits. It's all good. And then last but definitely not least, trading zones from the middle and not the extremes is a big reason that I'm taking losses, because this comes from FOMO, fear of missing out. You don't want to chase the market if you miss your trades, man. Just wait for the next one, because the market is going to give you opportunities all day long. It's not like you miss one trade and then the screen goes black and the market just completely shuts down and never opens back up again. You'll have plenty of opportunity. If not today, it'll be tomorrow, the next day after that, next week, next month, next year, next decade. The market is not going anywhere. So don't try and stress if you miss a move. You're not missing out on anything. And I think that's the biggest problem that I have when it comes to trading the zone from the middle. And that was one of the mistakes I made this week also. So let's go ahead and just look at some trades where that's the case. Let's see. Okay, here's an example from December the 20th. Let's look at trade number 1. I went long right here based on what I thought was a higher low, but I closed this when I saw the zone because I realized, okay, this is the zone between these two blue lines. I'm going long in the middle. I need to kind of get out a little bit. All right, so that was an example. There was another one. Here's one from December 21st. Trade number 1. I shorted here, but I should have shorted from the top of the zone. Look at where I shorted from. I shorted from the middle of the zone, and it didn't work. But on trades 2 and trades 3, when I shorted from the top of the zone, I saw nothing but success. Same thing right here on trade number 4, where I shorted from the top of the zone. I saw nothing but success. But anytime I traded from the middle, like I did right here on December 21st on part 2 from trades 5, 6, 7, and 8. Now trade 8, yeah, I made money on that, but that was more so luck than strategy. And if you look at 5, 6, 7, and 8, look at where I entered on all of these trades in the exact midpoint of the zone. The zone stretches from 535 down to 505. I'm entering around the 517 level, so literally right in the middle. You don't want to enter in the middle of a zone because now you're exposing yourself to too much risk. It could keep going up to the top of the zone. It could keep coming back down to the bottom of the zone. You're just exposing yourself to the ebbs and flow of the market without, actually exposing yourself to potential profits. It's more likely for you to lose money than it is to make money in this situation. So that means that's a trade you want to maybe avoid and not take. So always, no matter what, no matter how tempting it might be, make sure you avoid those trades where you're trying to trade the zone from the middle. If you want to trade the zone, you trade it from the extremes. So if you want to short the zone, short it from the top. If you want to buy the zone, just buy it from the bottom. And if it's in the middle and you feel like, oh, I missed out because it hit the bottom and now it's going back up to the top, just accept it. It's like, look, man, if it comes back down here again, you'll have another chance to get in. But if it doesn't, it'll break out of the zone and continue moving up. And then it'll start trending. And then you'll have a whole nother scenario of setups that you can look to trade. So that goes back to just realizing that the market isn't going anywhere. It's going to keep moving. So don't try and force that zone trade if you're trying to take it from the middle. Leave it alone if it's in the middle. But if it's at the extremes, do what you do and follow your trading plan. So that's very important. Make sure you trade those zones from the middle and nowhere else other than that. I think I have one more example of that. Let's see. Okay, so here are some examples right here. Now, On 11 and 12, this was an example where I did trade the zone from the middle, and it could have been profitable, but I didn't lock in those gains. And that comes back to something we talked about earlier, you know, having opportunity right there in front of you, but just not capitalizing on it. This was an example of that from 11 through 12. But if you notice, when I went long at the bottom of the zone, things worked out for me. Now notice how I thought the zone extended on December 22nd. I thought it extended from 805 at the top to 775 at the bottom. But if you notice, it actually extended down to 760. So I thought I was going long at the bottom of the zone right here on 13 through 16. And I forced that trade 4 times, which comes back to the rule that we talked about earlier, which is you got to have a 2-loss maximum rule on the setups that you're trying to take. If it doesn't work 2 times in a row, just let it go. It's all good. It's no big deal. The market is going to keep moving, and it's always opportunity, so don't trip on that. So I was going long right here thinking that this was the bottom of the zone, but if I would have followed my 2-loss rule, I would have been able to realize, oh, the bottom of the zone is, well, the bottom of the range is really down here. Okay, I was wrong where I thought the range was before. So I had to adapt. And that goes back to what we talked about earlier also, which is being able to adapt to an ever-changing market environment. Maybe you thought the bottom of the zone was right here because you had support from over here a little bit earlier. But then when the zone extended itself and became larger, you got to extend your line. Change this line, bring it back down a little bit, and then establish a new zone and then play that zone for what it is. And I would have been perfectly successful if I would have went long at the complete bottom of the zone every time down here. So it's so important to make sure that you, for one, follow all of your rules, because all of these rules that I have are interconnected. Me breaking one rule actually might lead to me breaking a second rule because I didn't get it right the first time. So all of these things relate to each other. They're not independent events where it's like, okay, just follow one and maybe you can break the other. It's like, no, you got to follow all of them because they all intertwine with one another. It's a very complicated process, and you got to get every part of it right. That's just what it is. That's trading in a nutshell right there. So if you look at 19 and 20, I shorted from the top of the zone and I had success. All right. So that's so important when it comes to the zone. Make sure that you trade from the extremes and only the extremes. And if you miss the move, it's all good. The market is going to keep moving. You can make some money later. Just be patient. All right. So that was part number 2 of today's video. Well, really part number 3, which is where are my losses coming from? And then let's move on to part number 3, which is the biggest lessons that I learned from this whole entire process and just breaking down all of my trades from this week. So let's go ahead and talk about it. So the biggest things that I learned. I trade my best between 9:30 a.m. and 11:30 a.m. Now, since November, I've really been trying to learn how to trade the entire session because I feel like when I go back and do my post-review analysis, I chart up every candle on the Dow Jones from the London session when it starts at 3 o'clock until the market closes for the New York session at 4 p.m. So that's about 13 hours worth of charting up that I do. And every time I go back and I finish charting up the afternoon session, I'm like, wow, it was opportunity here in the afternoon. I could have made more money. But it's not about making more money. It's about making money where you feel the most comfortable and where you have the most familiarity. I'm more familiar with the morning session because that's what I do. I'm a morning trader and that's what I enjoy. So I need to stick to that. You know, there's nothing wrong with coming in, making a few good trades in the morning session, and then compounding that day after day. That's usually what I do. But anytime I take losses, more than likely I'm either not following my trading plan. And if I'm not following my trading plan, it's usually coming at a time that's later on in the afternoon. I haven't quite figured out why exactly I'm taking losses in the afternoon, but I have figured out that I do take more losses in the afternoon. So I just got to cut that out of my trading strategy until I figure out why exactly I'm not as proficient in the afternoon as I am in the morning. When I figure that out and I can find a way to get better at it, then I can start to come back and integrate that into my strategy once again. But for right now, I just need to stick to trading between 9:30 a.m. and 11:30 a.m. because that's where I do the best. So let me set myself up for success and put myself in situations where I have a higher probability of being successful. And I think that's me trading between 9:30 and 11:30. And then we talked about this second one a little bit. So let's talk about it some more, which is There's no such thing as an easy trade. I have a good strategy, but I still have to respect the market at all times. Don't think that you can just come in here and just make points on points on points because you've been making points before. Every day is a new day. Every trade is a new trade. So everything is an independent event. What you did before has no meaning to what you're about to do right now. If you was good enough to be successful before, well, come back and prove it and do it again, which means that you have to respect the market. You can't just break your rules and say, oh, okay, this time it's okay because such and such and such. You got to be disciplined and you got to be strict with your discipline and stick to the strategy that you have. Do not disrespect the markets. The market will reward you for being a good trader. But because the market rewards you consistently, don't get big headed and get arrogant and start thinking that, I can do whatever because I'm just that dude. No. It's the reason you were successful before. And if you stop doing the things that led you up to that point, you're not going to be able to maintain that success that you were able to reach. So you got to stick to your strategy no matter how confident you get. Always have respect for the markets. That's so important to remember. And that's one of the things that I learned that's very important. So number 3, there are no time limits for me to hit my goals. I can take as much time as I need. I think one of the big reasons that I started straying away from my trading plan was because the way that the withdrawal system is set up for the funding company that I use, you have a payout window. So you can request a payout between the 1st and the 5th, and then once again between the 15th and the 20th. So I was counting down the days that I had to reach my profit target. I was about like 3 days away, and I needed to make that 30 points that I was telling you guys about before earlier. So I think I put unnecessary stress on myself because now I'm saying, okay, I gotta have these trades and I gotta have them right now or within the next 3 days so I can take out this money, so I can take a payout before the end of the year so I can have some New Year's money to spend with, right? So I'm thinking about, once again, the account balance instead of thinking about the trades that I need to take. Because at the end of the day, the Apex company, the Apex funding company that I'm with, they're not going to punish me for not reaching the payout limit. They only take the account away from you if you hit your loss limit that you're not supposed to. So as long as you don't do that, you're good. There is no time limit. If it takes me 10 years to hit my payout goal, then it takes 10 years. If it takes 10 days, it takes 10 days. But however long it takes, that's the amount of time that I need. So I'm not going, from this point forward, I don't want to put any type of number on it. I don't want to put any pressure behind it. I'm just like, look, I'll hit my number when I hit my number. But in the meantime, let me focus on making the best possible trade that I can right now based on the setup that I'm looking at. And I think that's what I got to focus on, because both of the times that I got up to getting close to hitting the payout limit, this kind of started to eat away at me because I started putting so much pressure on myself. Like, Ty, you got to make this payout right here, right now. You have to, so don't try and put unnecessary pressure on yourself. Don't put a time limit on yourself. Don't try and trade your account balance. Just focus on the trades in front of you and everything should be all right. Okay. So next, respecting my daily loss limits is my biggest issue that's holding me back, because the drawdown that I went into over this past week, when I look back at all of my performance metrics from the previous week, the biggest outlier was all of those losses that I took on December 18th. I took 1,300 in losses. That put me back by a whole lot. Now, mind you, my daily loss limit is 40 points. So for me trading 2 contracts, that would be $400. So for me to take a loss of $1,300 means that I more than tripled what my daily loss limit would be. And that's just unacceptable, because that just puts you behind the 8 ball so much that it makes it hard to get back to that point that you was just at before. Not only from a financial perspective, but from a mental perspective. It's hard to just bounce back from a loss like that and say, all right, well, I'm back at it and back following my plan again. More than likely, you might try and do some extreme things like over leveraging or breaking your trading rules, thinking that this time will be the one exception. So I think that's why respecting my daily loss limits is so important. Anytime I've ever had like a regular loss where I stayed within my daily loss limits, I think like 80 to 90% of the time, I'll come back the next day and make all of those profits back with pretty much like no difficulty. I'm not going to say it was easy, but I just came in, I followed my trading plan. I had a mental psychology, I had a state of mental psychology where I was calm. I was cool. I was collected. I wasn't tripping. I was like, look, man, I took some losses yesterday, but it's all good. I'm not tripping. What's the big deal? I'm gonna come in here today, follow my strategy, and do what I'm supposed to. Now I can think like that, and I can think straight, and I can think clear when I'm taking smaller losses and respecting my daily loss limit. But when I start getting above that number, then that's when I start bringing out my hero cape and trying to say, okay, I gotta save this account and get it back to where it was, and I gotta bring back the glory. And you just can't think like that. So for me to avoid that type of thinking, I just have to respect my loss limits. I don't really know an easy way to do it. This is the biggest problem that's been plaguing me. But I think the reason is pride. As a human, especially as a man, you'll probably have a lot of pride where, especially if you study a lot. I study a whole lot. I put in a lot of work and a lot of time. So I feel like I deserve to be successful. And that's cool. You can think that way. But just don't act on those thoughts that you have. Meaning that, okay, you might have pride and you might think you're a really good trader. But if the market is telling you that, hey, this trade isn't working, don't keep trying to force it. The same thing with your daily loss limit. You hitting your daily loss limit is just the market telling you that, hey, today, Ty, you haven't been able to do what we know you're supposed to do. So you hit your number. How about you just walk away and come back tomorrow, okay? And I'll sit up there and say, nah, Mr. Market, I'm not going to quit. I'm not a quitter. My parents raised a trooper. I'm a warrior. I'm going to keep going. I'm not going to stop. I know what I'm doing, and I'm going to get it right. You could feel that way, and it's okay to feel that way. But don't act on it, though, all right? You can feel that way as much as you want to, but you got to remember that you got to set yourself up for success going forward into the future. Now, when I came back on Tuesday after I took that 1,300 in losses, yeah, I had a good day. I did. But I was still down by like $800 at the end of it all after that first day. I made $500 that day. All right. But if I would have took that normal $400 loss that I should have took on Monday, I would have came back the next day and made 500 and then been up by 100 instead of still being down by 800. So that's why it's so important to respect those daily loss limits, because if your losses are too big, even if you have an outstanding performance the next day, guess what? You're still probably going to be in the hole. And that's a terrible feeling to have, because I had one of my best days on Tuesday. Well, last Tuesday. But because I had took so many losses on Monday, it didn't even matter what I did the next day, because it's like, wow, dang, I'm still in the hole. So that's why respecting the daily loss limit is so important. The daily loss limit can lead to bigger problems down the line if you decide to break it. So always remember to set yourself up for success, and that starts by following your rules the first time and getting it right the first time, because you never know what the future might hold. So set yourself up for success and be prepared. And then last but certainly not least, I perform better when I lock in profits day by day. And that goes back to me trading between 9:30 and 11:30. You know, I think one of the biggest reasons I keep trying to trade the entire session is because I feel like eventually I'm due for a day where I just make thousands and thousands and thousands of dollars. I feel like that's in my future. And yeah, that's how I feel. But like I was saying earlier, you don't just want to act on all the feelings that you have. You can just feel that way, but not really act out on it, you know? So for me, I'm a type of trader where I come in and I do best by taking my 2 or 3 good setups, making my profit, locking that in, doing my trade review, and calling it a day. And then coming back the next day and doing it again. Coming back the next day and doing it again. And then if I just keep doing that and doing that and doing that, when I do run into a losing day, if I follow my loss limit, it won't be that big of a deal, because guess what? I got like 6 or 7 days in a row where I made profits. Okay, I gave back profit on one day, but I kept my loss limit reasonable, and that protected me. And that means that, okay, now I might only have like 4 or 5 days of profit, but I'm still profitable for the week and profitable for the month. So it's better when I do it that way. I keep trying to force myself to be this trader that trades the entire session from 9:30 to 4, but that's just not me. Not right now, not at this point in my career. It'll be certain days where I can do that, like maybe on a FOMC day where an announcement comes out at 2 o'clock. Yeah, I can trade that afternoon session because it's a catalyst there that'll give me the same type of momentum that I would see in the morning. The catalyst in the morning is the fact that the market opens at 9:30. So that's the catalyst that I need. But after that energy dies down, that's when my trading starts to fall off a little bit. So it's better if I just lock in those profits day by day between 9:30 and 11:30, and then just keep coming back the next day and picking a little bit, picking a little bit, picking a little bit. And if you pick away a little bit every day, at the end of the week or at the end of the month, when you look in the basket that you've been collecting, your basket is going to be pretty full. And you'll say, oh, wow, I didn't realize I collected that much. I guess that little bit adds up, you know. You could try and get a whole dollar at one time, or you could try and get 5 cents here, 10 cents here, 25 cents here, 30 cents there, and just work your way up, nickel and dime your way up to a dollar. So there's multiple ways to skin the cat. And the way that I learned that's best for me is to just trade from 9:30 to 11:30, lock in those profits day by day, and I should be good. So that right there was the biggest lesson that I learned from this drawdown period. I hope you guys were able to learn a little bit from this too, and hopefully you took some lessons away from here that you won't have to repeat the same mistakes that I did, because I'm not gonna lie, this is a very hard way to have to learn these lessons. But you know, I take the cards that life gives me. You know, I play the hand that I'm dealt. So I learned from my mistakes, and that's what's important. So I hope you guys can learn from this too, and make sure that whatever you do, if you remember anything from this video, just remember this: follow your trading plan, follow your strategy. Don't be greedy, don't be fearful, and make sure you set yourself up for success, because you never know what those mistakes that you're making now might lead to in the future. So make sure you do the right thing, because hey, trading is a crazy game, and you want to make sure you stay on top of it and you stay in the driver's seat. You don't want to get into a point where you're just hoping and praying that this trade works, because you need to make some money. All right. So that's pretty much all I have for you guys today. I hope you learned a lot. Make sure you stay tuned a little bit later on, because I'm dropping the next video that I did for today. I think today is day number 53. It's December 26th. So I'll be dropping that video in a couple hours after this one comes out. So stay tuned and keep your eyes open for that. But until then, you guys, I'll see you the next time. I hope you learned a lot. Keep trading, keep studying, and I'll see you soon.